Ethereum isn't just a cryptocurrency. It's a digital investment platform that powers the next generation of finance. Unlike Bitcoin, which primarily acts as a store of value, Ethereum functions as a programmable network where assets, contracts, and payments can operate automatically through smart contracts. The explosive growth of digital investment is powered by technology, transparency, accessibility, and a generational shift in trust, from traditional intermediaries to open-source code. Ethereum sits at the center of this transformation, providing the infrastructure that connects decentralized applications, stablecoins, and institutional-grade finance, making it a key driver of the digital investment revolution. Key main growth drivers: increased internet and mobile access, millennial and Gen Z adoption, decentralized finance, DeFi, tokenization, major institutions entering Web3. Companies like BlackRock, Fidelity, Visa, Goldman Sachs, MasterCard, JP Morgan, BNY Mellon, PayPal, and etc. are now integrating Ethereum-based products and stablecoins. Smart contracts are the heart of Ethereum. They're self-executing programs written in code that automatically carry out an agreement when predefined conditions are met. Once deployed on the Ethereum blockchain, they run exactly as programmed, without downtime, censorship, or third-party interference. For example, a smart contract can say, if Alice sends 1 ETH, automatically issue her 1 digital ticket. No middleman, no manual approval. It just happens automatically. At its core, a blockchain is a digital ledger, like a database, that's shared across thousands of computers around the world. Each block stores a list of transactions, and once added, it's linked to the previous block, forming a chain. This makes the blockchain transparent, secure, and tamper-resistant, because every participant has a copy of the ledger. Any attempt to alter a transaction would be instantly rejected by the network. There's no central authority. It's decentralized and self-verifying through consensus. Think of blockchain as the Internet of Value. Instead of sending copies of data, like emails, you can send verified ownership of money, assets, or information directly to someone else. Ethereum Key features autonomy. Once deployed, no one controls it. The code does. Transparency. The rules are public and verifiable on the blockchain. Trustless. You don't need to trust the other party, just the code. Efficiency. Removes paperwork, delays, and intermediaries. Programmability. Developers can build complex financial logic, lending, insurance, payments, all automated. Some real-world examples: DeFi apps like Aave or Uniswap use smart contracts to lend, borrow, or trade crypto instantly. NFTs, digital collectibles, are powered by smart contracts that record ownership and royalties. DAOs, decentralized autonomous organizations, use contracts for community voting and governance. Benefits of digital investment: 1. Global accessibility. Digital investments break down geographic barriers. Anyone with an internet connection can invest in assets like crypto, tokenized stocks, or DeFi platforms, 24/7, anywhere in the world, without banks or brokers. 2. Speed and efficiency. Transactions settle in seconds or minutes, not days. No need for clearinghouses or paperwork. Blockchain-based systems like Ethereum handle transfers, payments, and contracts automatically through smart contracts. 3. Transparency and security. Every transaction is recorded on a public, immutable ledger. Investors can verify holdings, trades, and contract rules directly. No hidden fees, no opaque middlemen. This builds trust through code, not institutions. Lower costs by removing intermediaries, banks, brokers, custodians. Investors save on transaction and management fees. DeFi platforms often provide direct peer-to-peer investment and yield opportunities. 5. Diversification and innovation. Digital investing opens access to new asset classes, cryptocurrencies, NFTs, tokenized real estate, and even on-chain treasury bills. It gives investors more ways to diversify portfolios beyond traditional stocks and bonds. 6. Passive income opportunities. Through staking, yield farming, or lending protocols, investors can earn consistent returns on their assets, similar to interest or dividends, but entirely automated and on-chain. 7. Ownership and control. Digital assets are self-custodied. You hold your own keys. Unlike traditional investments, your funds aren't locked by an institution. You maintain full control and transparency over how your assets are managed or deployed. 8. Programmability. Ethereum smart contracts allow for customized financial products, automated loans, insurance payouts, escrow systems, without human involvement. This programmability makes digital investment scalable and flexible. 9. Liquidity and fractional ownership. Tokenization allows assets to be divided into small fractions, so you can own a piece of expensive assets, like real estate or art. It also enables instant liquidity, as digital assets trade globally around the clock. 10. Future-proof finance. Digital investing aligns with the broader evolution of finance toward automation, transparency, and decentralization. It's not just about higher returns, it's about participating in the next phase of the global economy. Digital investment offers many opportunities, but it also comes with notable risks and challenges that investors must understand before entering the market. One of the most significant risks is market volatility, especially in the cryptocurrency space where asset prices can rise or fall drastically within hours or even minutes. This can lead to substantial financial losses if investors are not prepared or lack a long-term strategy. Behind every digital opportunity lies a risk. Understanding both is the key to smart investing. Follow and subscribe. I love to connect with you. The journey of financial freedom starts now.